Are you investing in any more Tesla or SpaceX, or have you reached a point in your diversified fund where you feel comfortable stopping? I've reached the maximum amount in the funds I oversee. We sold around 25% of the shares we had purchased for clients when the stock increased in value by 20 times. Personally, I didn't sell any shares. Normally, I exclusively invest in mutual funds, but I made a commitment to the directors of our fund. In this particular case, I made an exception and declared that I would be the last to arrive and go, and that I would not sell any shares for myself until we had sold all of our clients' stock. In terms of purchasing more, I would if I could, but I'm not able to. Additionally, other guys at the company do stuff at a great price. It was at this time that they also unveiled this model. They plan to sell the car for, perhaps, a third less than what it is currently worth in these credits, and they will only charge half of what it currently costs. Well, this is in 20 years ago, Toyota nearly brought the whole car industry to its knees. With some of the most cutting-edge software development and production skills in the business, Tesla is a leader in efficiency and technology. Its performance, extended range, and minimal maintenance costs make it the most dependable and efficient electric car available. The truth is that supporting Tesla's purpose and culture of changing products is more important to investing in the firm than simply purchasing its stock. It's also a means to make a positive impact on a sustainable future, which is already quite possible. For this one reason alone, a number of investors have determined that Tesla is a lucrative long-term as well as short-term investment. We're going to examine the remarks made by well-known Tesla investor Ron Barron today as he makes yet another intriguing forecast regarding Tesla and its shares. Watching this video is something you shouldn't miss if you own Tesla stock. For now, SpaceX and Tesla are more intriguing. We have invested in Tesla then. It is currently in a similar stage as it was when I was investing, which was in 2014 or 2015. They used to produce 40,000 automobiles annually, but today they produce a million and are almost at 20 million. They have been expanding by 50% annually, and this year they should be up by around 25% to 30%. The following year should be roughly the same. However, a new vehicle with 25 to 30 revenue units is on the horizon, and the $6 billion annual battery market is expected to increase over the next 3 years. That will increase by 30 times. There has been a lot of discussion about the UAW and the big three automakers' possible strike. It has been mentioned that they need to cope with all of these EVs. Compared to Tesla, their cost basis is significantly higher. Therefore, each time an EV is sold, one less gasoline vehicle is sold. They profit from the sale of gasoline vehicles, but they lose money on EVs. The traditional OEMs are having difficulties at the moment, but in the end, I believe that they will manufacture the units and the metal, and in the end, they will purchase software from Tesla. Tesla is anticipated to function similarly to the Intel inside of a Microsoft PC. Everything that goes into making a car, including its inside, will be made by Tesla. They will eventually receive a license for that. Are you purchasing? Billionaire investor and ardent Tesla supporter Ron Barron has garnered significant attention for his consistently optimistic forecasts about Tesla shares. The financial community has been enthralled by his unwavering faith in Tesla's future, and his most recent predictions have shocked the sector. Barron is still a fervent backer of Tesla and recently revealed, shocking everyone, that he has invested over $1 billion in SpaceX, Elon Musk's aerospace and satellite manufacturing company. He recently stated in an interview with CNBC that he thinks Tesla's valuation would rise significantly in the upcoming years. Hey everyone, happy to be back at Tesla tomorrow. Barron declared with confidence that Tesla's market share will grow to 4 or 5 times its current level in the next 7 years. This coincides with Tesla's stock rising an amazing 120% this year due to a number of causes, including the Federal Reserve's loosening of its position on inflation, the growing appeal of AI as an investment issue, and Elon Musk's renewed concentration on the business after appointing Linda Yaccarino as CEO of X. Our estimates show that if Tesla's stock price were to rise 5 times from its current level of about $276 per share, its entire market value might soar to well over $4 trillion. Before we continue, though, please click the like button, subscribe, and enable post alerts if you enjoy this kind of content so you can stay informed about all things Tesla. Earlier this year, citing extraordinary demand for Tesla's automobiles, Ron Barron predicted a lucrative future for Tesla and its investors. Barron was even more bullish, estimating that Tesla shares could rise to little under $1,500 per by 2030, while Elon Musk planned to produce 20 million cars by then. Moreover, Barron made bold expectations in his most recent Tesla stock forecasts. Given that Tesla's stock is currently trading for less than $300, he stated that he had an ambitious price objective of $500 per share by 2025. This is a significant upside in Tesla's stock price. Barron said in his most recent interview that he currently owns 17.5 million Tesla shares, which are worth $4.8 billion. Furthermore, he disclosed that since making his first investment in SpaceX back in 2017, he has increased his interest to nearly $1 billion. Notably, Barron, a well-known wealth manager with a reported net worth in the billions, has garnered attention in the past for his extremely optimistic remarks regarding Tesla and its stock. Since 2014, he has been a devoted supporter of Tesla, reportedly earning about $4 billion from a $380 million initial investment. Barron has not stopped reaffirming his consistently optimistic attitude on Tesla, highlighting his lasting faith in the company following these exceptional advances. Is it accurate to suggest that Tesla stock is a smart investment at this time based on Barron's standing in the investing community? The performance of a company's stock market is determined by a variety of internal and external circumstances. Therefore, there's usually no clear-cut solution. But given what's been going on with Tesla lately, it looks like an extremely successful investment in the years to come. 2023 has witnessed a tremendous gain in Tesla shares of over 150%, with what is considered a monster rally. The most recent data indicates that a number of variables, such as increased corporate earnings, a thriving EV market, and clever alliances with leading companies in the battery charging space, have also contributed to this astounding rise. In addition, this week saw the most recent surge in momentum as Morgan Stanley analysts revealed an astounding boost in Tesla's price target, citing their optimistic assessment of the company's state-of-the-art Dojo supercomputer. Without a doubt, Elon Musk's massive electric vehicle is not without its challenges. In actuality, Tesla still faces a number of short-term difficulties, including a slowdown in revenue growth, a decline in operating margins, an ongoing price war in the EV industry, and other macroeconomic threats. One thing is certain, though. Wall Street and other analysts continue to be very optimistic about Tesla's potential for future growth. For example, well-known financial guru Kevin Paffrath recently pointed out a number of levers that can encourage the price of Tesla shares to rise even higher. The analyst confirmed that, in comparison to other blue-chip stocks such as Apple, Microsoft, and Amazon, Tesla is still significantly undercapitalized by large funds. He said that just 35% of large-cap funds own Tesla, and that the company is held by investors with comparatively small allocations. In a similar vein, Morgan Stanley continued to express its optimism in Tesla. Adam Jonas, a strategist at Morgan Stanley, mentioned in a 40-page study that Tesla's FSD technology will be trained by the recently deployed Dojo supercomputer, which is still under development. It might be crucial in raising the company's estimated worth to $500 billion. This followed Musk's intriguing declaration that robotics and artificial intelligence will ultimately provide all of Tesla's value. Tesla is a corporation that does more than just make cars. It's a business that wants to build an ecosystem of sustainable energy using EVs, solar power, battery storage, and other relevant goods and services. The goal of Tesla is to produce products that can quickly replace some of the largest energy sources on the planet and to expedite the global transition to this.